Well, hello and welcome to the Thank God It's Friday trading session right here in Lagos, Nigeria. Let's get a check on what's playing out with oil prices now. We see oil prices are down with signs demand in China. That's the world's biggest crude importer continues to underperform amid its uneven economic recovery. And we see Brent, that's down 0.9%, about 1%. In early trade, $71.91 per barrel. And we see WTI crude, $68.08 per barrel. So we're still seeing weakness right there in the oil market. To the FX market now, we see the Naira, it appreciated at the NAFEX window by about 18 Naira 56 kobo, but we see for NFM, there's weakness there, 0.29% down, 1,650 Naira. That was a close to the dollar. And we saw the CBN intervene, selling dollar to in the spot market to authorize the participants. So definitely, even with that, we saw some weakness right there. And to other stories, you see the Securities and Exchange Commission is pushing for stronger laws to protect Nigerians from illegal investment schemes, including Ponzi and pyramid schemes. This provision is part of the new Investments and Securities Bill 2024, now before the National Assembly. If passed, the bill will impose penalties of up to 20 million naira or 10 years in prison for operators of these schemes. The SEC's Director General, Dr. Omomatimi Agama, adds that the bill will also provide compensation for investors facing losses due to revoked registrations of dealing firms. Additionally, it includes new regulations for commodity exchanges, signaling Nigeria's commitment to building a world-class capital market for economic growth. And it's all about the budgets now. See, the Delta State's Governor, Sheriff Oborowori, has presented a budget of 936 billion naira appropriation bill for the year 2025 fiscal year to the State House of Assembly, with an increase of 29% of the approved sum of 725 billion naira for the year 2024. The budget is christened Budget of Fiscal Consolidation. Is made up of recurrent expenditure of 348 billion naira, representing 37%, and capital expenditure of 587 billion naira, representing about 62% of the total budget. And we see the federal government has unveiled the proposed budget of 47.9 trillion naira for the 2025 fiscal year. The Ministry of Budget and Economic Planning, Senator Atiku Bagudu, disclosed this to journalists following the Federal Executive Council meeting chaired by President Bola Tinubu. He adds that the council has approved the medium-term expenditure framework, MTEF, for 2025-2027. According to the minister, FEC has pegged the crude oil benchmark at $75 per barrel with an oil production target of 2.06 million barrels per day. All right, that leads us to our next conversation now. That's our first conversation with Mr. Bismarck Rwani. Great to have you, Mr. Rwani. It's that season again. We're getting plans, spending plans by governments for 2025. And we have over 200 billion Nigerians, and the budget is equivalent to $28 billion. What are your thoughts on this?
Well, that's good morning, and thank you for having me. The budget actually went from 30 trillion last year to 48 trillion naira this year. But if you add the supplementary budget of last year, which is 2024, you had the total budgetary expenditure, both supplementary and nominal, comes to 37 trillion naira, 34 trillion naira. Now, the budget in dollar terms, and basically the exchange rate that was used last year was 800 naira to a dollar. This year, we are using 1,400 naira to a dollar. So in dollar terms, the total expenditure declined by 27%. In naira nominal terms, the expenditure increased by 35%. So what have we done here? Simple arithmetic means that the total budget of last year, you just increase it by the level of inflation, average level of inflation, about 33%, and you got exactly what you have, which is 48 trillion naira. So if you discount for inflation, there's been no growth. If you dollarize the budget, there was a 27% decline in total expenditure. But interestingly, the growth projections for the budget for 2025, we're expecting to grow at 4.6%, which is higher than 3.8%, which we projected last year. We projected 3.8 last year, but we achieved 3.1%. The inflation target for last year was 21.4. The actual inflation is about 33, 34%. This year, there's no figure for inflation in the projected budget. Again, like I said earlier, the exchange rate last year was 800 naira target. This year, the target is 1400. What is the relevance of using 1,400 as the projected exchange rate? You and I know that the true value on a PPP basis for the naira is about 1,100. We know that the market today is trading at 1,735. What the federal government is saying is that, yes, we realize that the naira dollar value will not go to its PPP value. Well, we are realistic enough to know that we are putting it at 1,400, which is what the aspiration is. But if last year you budgeted at 800 and the actual outcome was 50% lower, which is it came out at about 1,700, then we have to be careful with the budgeting and our expectations for next year. One other very important point is that the oil production last year target was 1.78. Our average throughout the year was about 1.3 million barrels. Today, the budget is being based on a production level of 2.06 million barrels a day. Is this realistic in the context of the new leadership in the United States? Is it realistic in the context of the new budget and OPEC framework? Is it realistic if we are assuming that there will be no vandalism in the Niger Delta? Now, the other very important factor is the crude oil price. The crude oil price projection last year was $77. In actuality, we came in slightly above that, maybe about $81, $82 per barrel throughout the year average. This year, we are budgeting $75 a barrel. As we speak, and you just said it, the price of oil is much lower than that. In the Trump dispensation, we do not expect the price of oil to be at 75. Therefore, I think that the budget benchmark price, based on which we have excess crude, anything above it, must be brought down to near $65 or $60 a barrel, so that you have some headroom. Now, what does this all mean at the end of the day? We are budgeting for a deficit, and the deficit amount is, we are budgeting for a deficit, and we have been silent on the inflation target. And so consistently over the years, and that has been a norm, we've always spent more than what we earned. But this time, I think the earnings are going to be much stronger because of the reduction in subsidies, because of the reduction in, theoretically, reduction in leakages, right? And a strengthening of the basic format of fiscal consolidation will take place. So, generally speaking, it's early days. We have the medium-term expenditure framework. We have the budget for 2025. It has to go through Parliament, which is the National Assembly, and the committees will play around with it.
Right.
I expect that there will be an increase of some sort, but generally speaking, it's a balance. It's something that is useful and can be worked with to achieve macroeconomic stability in 2025.
Right. I guess the assumptions are quite interesting, and maybe hopefully if there's some kind of bull run with oil prices, then we might be able to get that benchmark. But on the other side, we see the IMF has downgraded Nigeria's growth outlook by about 0.2%, but they expect some kind of rebound in 2025.
Yes, the IMF have what they call the regional outlook, which they release every October and April. The October report was launched yesterday at the Lagos Business School. And the theme of this report was reforms amid great expectations. Reforms amid great expectations. And what they tried to do was to analyze the region of Africa and try to see the similarity between what's happening in Africa and what's happening in Nigeria in particular. So one of the key elements they discussed was macroeconomic imbalances are gradually easing, and thanks to policy adjustments. Most African countries, including Nigeria, are carrying out some adjustments and reform adjustments, like ours, subsidy reduction, and so on and so forth. Inflation has declined in many countries, but challenges remain. you notice that in the case of Nigeria, there have been 2 months of decline, and then we're going to have inflation numbers, I think, sometime today. There'll be a likely increase. So there's some heterogeneity, that is the difference between some countries and others. According to the IMF, exchange rate pressures have partially eased since January. Therefore, if you look at Nigeria, for example, exchange rate pressures built, and the Naira traded at 1,910 per dollar. Now it has appreciated, so to speak. It went all the way to 1,200, and now it's trading at about 1,735. Now, in terms of growth, they think that output constraints exist, but there are various things that have to happen. We're talking about international bond markets have reopened, and borrowing costs are still elevated, and funding needs remain high. That applies to Nigeria as well. Growth is expected to pick up modestly, the word modestly, in 2025, but with significant differences between countries. What came out is that resource-intensive countries, like those who depend on oil, lithium, copper, gold, are performing less. Their performance is less efficient than those who are not resource-dependent. In other words, those countries that are not naturally endowed are working harder and achieving better results. But again, that is a 2025 outlook. Now, there's some divergence and also some risks. The risks they noticed across Africa were climate shocks, which we are seeing even in late November. Last night, there was a massive rainfall in Lagos. Mpox spreading, that's a major issue. Volatility in commodity prices, we are going to see more of that now that there's a stalemate in Ukraine and that we are going to have a Trump presidency. So volatility in commodity prices. A slowdown in advanced economies. China has already reported today that the economy is slowing down and they're having a property problem. And then more than anything else, volatile financial markets, which could lead to high sovereign risk premium. So for countries like Nigeria who are going to the markets to raise money, we have to agree with that hypothesis that, one, the cost of borrowing is going to increase. Two, that commodity prices are going to be volatile, and therefore we cannot predict what's going to happen. And three, we have to manage our resources efficiently. Right? And they ended up with the whole idea that no easy choices, but inaction is not an option. In other words, there are no easy choices, but doing nothing is not an option. We have to do something. It's better to do the wrong thing and change than to do nothing and accept that there will be no outcomes.
Right. Very interesting expectations there for resource-rich countries. I guess that's where the resource curse comes into play. But thank you so much, Mr. Bismarck Ruane. Always great having your perspective.
Thank you very much for having me.
All right, we'll take a break now. When we come back, we get expectations for the pharmaceutical industry. That's in a moment. Just stay with us. Welcome back. Well, we're expecting Nigeria's October inflation data later today. And right now, pharmaceutical inflation is still a cause for worry as purchasing power keeps being eroded. But let's get an outlook for the industry now. Joining us is Estelle Dogbo. She's a co-founder, Syndicate Bio. Join me right here in the studio. It's great to have you.
Thanks for having me.
Yeah, so, it's all about rising prices right now. I know experts have said that it's not a good thing, when people just expect prices, will keep rising. And we've seen pharmaceuticals, rise. We've seen the likes of amoxicillin, very important, medicines go up over 1,000%, in a short time. And looking at the industry now, it seems it's all about currency weakness.
Yes. And in fact, Nigerian pharmaceutical used to be a very good industry up until 2021. The market was growing at double digits in the 20%. Now we're talking about 9% increase depending on the source of data. And the truth is it's a strong industry, used to be a strong industry, but heavily dependent on import. And of course, with the fluctuating currency, it becomes much harder for local manufacturers to be able to import even APIs, because 70% of all pharmaceutical products actually come out of the country. So this is one of the reasons why the prices of very essential medications have risen to some very ridiculous amounts over the past year. And the issue even goes further because while local importers are suffering the consequences of this, multinationals are also going through like the same type of challenges. We've seen over the past year, most of the big pharmaceutical companies who used to be established in Nigeria drive the market through jobs and even, control the prices to the best of their ability, exit, which is really a source of concern at this point.
And I'm wondering, for an import-dependent country, definitely currency weakness, you don't want to see that, in that kind of economy. But at the end of the day, these medications are really important. But is it time for, Africa, countries like Nigeria start looking, okay, let's look at traditional medicine. How about we push that? How are you seeing that?
Well, traditional medicine, I mean, for the science, it's very important to have strong R&D, research and development, before encouraging and educating populations around the type of medicine and the type of alternative to go for. While those are still conversation ongoing, I think it's much more critical to look at the creative ways where we can strengthen the industry locally. There's no reason why Nigeria shouldn't have strong manufacturing plants in the country to at least produce drugs that are out of patent. So I think that there's still ways where the science can survive and thrive in this space while we continue to understand what traditional medicine can do.
Right.
For patients right now, the story is quite sad because it's estimated that about 60% of Nigerians are not able to afford the medication anymore. That is a very big number. And for those that even can afford, only 30% are able to stay on treatment. Here we are talking about important diseases like cardiometabolic disease, diabetes, hypertension. So we really need to look into the ways where we can strengthen the manufacturing locally.
Right, and it's quite interesting. Before now, I was big on getting my multivitamins, and recently when I tried to do that, I was rudely shocked with most of the prices I saw there, and I said, you know what, maybe I'll just go to getting back to my fruits at this point to get all my sources of vitamins. But, talk to me about the impact, to public health, generally at this point.
I alluded to that a little bit. A few years ago, the WHO has actually declared non-communicable diseases as a very big source of concern in Nigeria. Diabetes, hypertension, cancers. Those are diseases where people have to live with in the long term. And when we see the cost of medication quadruples or go up to 1,000%, like you have said, the meaning for the patient is that how do I stay on treatment? How do I survive? How do I find the source of funding? The other thing that we don't talk so much about is Nigeria is a purely out-of-pocket market where the patient have to pay from the salary, from the income for treatment, which is not the case in most parts of the world. That being said, I think that there's still an opportunity because despite all the challenges that the pharma industry is going through, there are emerging health technologies that are also coming up, which the government is beginning to embrace. We're talking more and more about genomic science, personalized medicine, and even using AI to understand more the disease within Africa, which would guide healthcare expenditure in the near future.
Right, and talking about out-of-pocket, payment for medical services, we know, HMOs are springing up, in the country, and we've had a couple of them, but it seems there's some kind of challenge, when it comes to these services trying to get the funds, back, from the HMOs. How's that looking? Well,
when it comes to HMOs and health insurance in general, it's still very nascent. We have to give grace to that industry because it's quite new, and expecting that HMOs will carry the weight of what healthcare expenditure is supposed to be is kind of tricky. I think that the conversation needs to evolve around what the National Health Insurance Scheme can do to enroll much more Nigerians, as well as include many more medications for reimbursement. That will have significant impact in reducing the cost to the average Nigerian. While HMOs continue to build and grow, there are very good HMO stories. There are some that work well, some that are still learning, but like for every industry, it's new, and we need to give it time to expand and establish itself.
Right, and we've seen the latest budget plans, by our government there, almost over 40 trillion, as was planned for spending in 2025, and there's always that argument about healthcare, spending. What kind of policy would you like to see, for the government to help revitalize the pharma industry?
I think that for the pharma industry and healthcare in general to thrive, the government really need to step in. And one of the immediate measures regarding the pricing issues and the inflation we are talking about is government should be in a position to regulate pricing. Healthcare is not like every other commodity where you see the currency fluctuates and then price of medication goes up. That has direct impact in people's lives. So I believe that, and experts in general believe that, the government should be able to establish policies that help control pricing and reducing markup from the manufacturing all the way to retail. That is a good way in itself to allow people to at least have some level of stability on the medication they have access to. There are other policies. There's a very strong issue that we have regarding the quality of the medication, because that also has a cost. Government need to start looking into ways to reduce the amount of counterfeit medicines that are circulating in the country, because, of course, a patient that takes the wrong medication eventually will pay more. And I think those are some of the policies I mentioned. The National Health Insurance Scheme, which I believe to some extent need to become more and more mandatory. Some very bold governments what they have done is they have helped reduce tax and import duty in the industry as well, such that people who are producing locally are able to benefit from some breaks and reinvest in the industry.
Right, but very quickly now, before I let you go, what are we seeing from the private sector? What kind of investment trends are we seeing in this industry?
Interestingly, VCs and private funding is actually really interested in the Nigerian healthcare industry and in pharma specifically. I think, going back to the conversation around tax, I think the government needs to provide some level of incentive to attract these investors, because the ease of doing business in Nigeria is arguably,
we need to get it easier.
We need to make it easier for investors to bring in the dollars and the foreign currency to invest. But the private sector is actually doing not so bad. We've seen a lot of new private hospitals. There are also quite a number of new local manufacturers that are betting on healthcare. So I think that that shows that the private sector can work hand in hand with the government as well to provide this level of alternative funding that can cover up for the deficit we are seeing in
and I hope they win, most of these bets. So thank you so much.
Thank you so much.
It was great having you, Estelle Douglas, who's the co-founder, Syndicate Bio.
Yes.
Thank you so much for coming on today.
Thank you for having me.
All right, so that's it from me on Business Morning. Definitely, I'll give you an intraday analysis later on Business Incorporated by 1 p.m. I hand things over now to Chamberlain.